Well, all right, all right, all right. We'll do it live. We're going to do it live right here because I want to look at this number right here, $1.923 million in, move your head, buying power. The problem that the position I'm currently in, we're up 10,000 today. That's only because we were downtown to Chinatown yesterday. If you look closely at this number, I'm actually $25,000 in the hole as far as I owe Robinhood $25,000 because I have 25,000 brokerage cash and I have minus $50,000 in options collateral. And if I do the math, get out the abacus, carry the 50,000 minus 25,000 means I'm negative $25,000. And that shows like I don't ever use this tab on this video on these videos with you because I don't borrow money from Robinhood. I don't have anything against those that do. It's called margin, aka debt. But I wanted to check in here to see if we can trigger something live. And I know all the SoFi fans are going to be, you're right. You're going to buy high and sell low. Well, my SoFi position is currently up around $3,700 and change. Oh, it's under that. It's at 3687. Okay, so we've got a position of 787. And SoFi is currently at 824, but I have a sell order in at 825. So if that clicks up to 825 as we're on here live, then that's going to deliver $82,500 to my skinny jean Panda Velcro wallet. How many Velcro wallets do you have? Well, there's the Panda Bears. There is the My Little Pony. There's my Holly Hobby. All of those are my Velcro wallets that go fit snugly into my skinny jeans. So the reason is several fold, and I don't want to get too deep in it in this video, but I am going to be raising cash in this account for very particular reasons, some of which are not very good to share. Doom and gloom type of market scenarios. I thought you weren't going to share it. I just think that things feel funny, don't they? Like when you follow the market, you end up collecting news such as Google laying off 10,000 employees, Meta laying off 12,000 employees, Amazon. And that's typically good news for investors regarding share price because that lowers expenses. Like UPS just announced a big layoff and they never lay people off. So all of these things, plus the debt, the national debt, we've talked about that for 30 years, but now the national debt is getting a little tricky, isn't it? I mean, currently we have our debt interest, I think is going to top $1 trillion this year in interest. So we'll just print more money. Well, what does that mean to print money? It isn't just printing money. It's basically printing debt because they do it in the form of selling us bonds, right? That is how they print money. They get more money and just write out a piece of paper in exchange for that money that they get from us or China or whomever is investing into our government bonds. We have a tremendously high credit rating because we're essentially the world's economy, the US dollar. But interest still has to be paid on that. It's not like they can just issue that paper and not pay the interest. They have to pay that interest or they suffer the consequences of a lower credit rating. I thought you weren't getting deep in the woods. I'm not going to get deep in the woods, but I'm going to try to collect my thoughts in an actual thoughtful video because obviously if you watch these videos, there is no planning whatsoever put into them. I just click the record button and go from there. So 10,000 shares, looking to sell those today. Don't do it, Bar. Don't give up on the SoFi. I think SoFi is onto something. I think it's great. But do I need to own it? No, I do not need to own it. I'm in the green right now. Plus, I've collected a bunch of money on my options premium with this company. Like, let's see the last several. Where are we? Here we are. So there is our limit sell, which is at $8.25, and it's just teasing me. Currently at $8.25 SoFi, 823. Just teasing me. So we have a $1,100 we collected on those calls, $640 on the puts. We have $440 on these puts. We rolled some calls for $46, $72, all kinds of action that's gone on the premium side. So I've done just fine with SOFI, and it becomes a convenient way to raise cash and get out of because I have zero debt in life. I've told you that many times. So why start now? I'll immediately be able to pay back my deficit to Robinhood at a very minimal amount of interest because they charge, I think it's 8% on the margin, but I've only had it for a day because yesterday I did sell some puts for the first time in a while. Let's take a quick look. Actually, I just sold one round. I sold two rounds in Stacy's account. I sold some PayPal puts at $56 expiring next Friday. And then she also has the $25 strike price puts on Alcoa. And currently both of those are doing well. Alcoa is at $26.56 and PayPal is at $58.26. But what about SOFI? $8.23. Come on, just get up to $8.25 while we're on here together. So I've done very little trading so far this week, as you can see. I'm trying to determine if the market is going to make one more crazy push higher, which I believe it will. But I also don't mind being in a stronger cash position, and then I can sell puts while the market's going up and collect, my 20% premium type of deal along the way and have less risk in all of these different companies that we own. Speaking of which, let's see, what do we have coming up? Not a lot this week. We have ACLS currently at 99% profit. What is it currently trading? I was trying to wait till it got to like 125 before I rolled it, and it's only at 120.19. So we'll see. We'll keep an eye on ACLS. It's a monthly. I prefer the weeklies, but it does have tremendous volatility, so the premium is going to be nice either way. Enovix, $14 calls. Those are at 98% profit. This thing bounces around on a daily basis. So it's currently down. No, it's currently up. It's currently up almost 4% after being down, 4 or 5% yesterday. So we'll be looking to roll that. SOFI at 824, just live look in. I got too far down in my whiskey on Robinhood, so it looks like I'm down $1,000. What would be down $1,000 is if I tried to buy these closed. So we're going to let those 500 shares of Robinhood go away at $9 bills. Just another example of the cap that you place upon yourself when you're selling covered calls. Premium is great. I love it. I think it's amazing. But you do limit your upside. So we did that on Robinhood. Same thing on PBF Energy. And I would normally roll this PBF Energy because I think it's a great company. But I'm in the profit here, even though it shows I'm down $1,880. That's, again, if I was able to buy that, if I wanted to buy that closed, that's what it would cost me at this very moment to do so, because PBF is trading at 52 and change last I looked. Oh, they're down a bit. So 51.67. I'll let those go at the end of the week if it's still above 48, which is above my cost basis. Plus, I've had a dividend and some nice premium. And I've got too big of a oil position right now. And oil has been floundering around, not down, just going sideways. I did very well with oil and energy in December, and it's basically befuddled me since. So we'll be looking to par down some of our positions, and PBF will be the first one on the chopping block. Unity, I think it's a great company. I will probably let it go at $34.50 if that's what it's going to do by the end of the week. We're in Unity for, I think, low 33s, like 33.08. Yeah, you were right, 33.08. And we've collected really nice premium in this short amount of time that we've been in on the Unity. In fact, let's look at this latest round. didn't start until January. So there it is. We bought 1,000 shares for $33,076, and then we started collecting some do-re-mi. $820 here. We gave $10 back to buy those clothes because we wanted to keep them. We sold another round at 960 and then rolled a 620 and rolled a 350. So that's a nice amount of money, plus then the upside on the share appreciation between the 3308 we paid and the 3450 that we're willing to let it go at. So we'll be keeping an eye on the Unity, but I wanted to try to do it live. Let me look. SOFI, what are you doing? Let's go to SOFI. So good. In fact, let's bring them up on the bar chart as well. I like to look at the bar chart 1 minute, 1 day, 1 minute chart. We've discussed that before. It just gives me an idea of where I think the position is going, because we look at the MACD and the RSI with it. So let's take a look at it now. Go to full chart on the SOFI. Where are we at here? Okay, we're already on the 1 day, 1 minute. So let's see, where are we caught up? Yeah, so we're caught up on time. And then we look down here and see that the RSI is at around 60. So we could be getting it. We could be filling at this very second. Let's look. There it is. E25. Is it going to fill? Hey, better. Give it a second, and then we'll update, and this should go down to 0, and all those dollars will be back in my pocket. Robinhood, I'll cut a quick check to them for the 25,000. I'm in the hole, and we'll begin to build our cash position. Wait a minute. They've only taken 90 shares. Did it go back down? Nope, back up. Come on, come and get them. Come and get the shares while the getting's good before I take them back. Come on, fill it. Buyers aren't biting. Back at 824. So we may be still battling this. So I've only sold off 90 shares. Are you serious? Wait. This is really, I really like it that you don't edit these videos. Then we can just watch here and be bored while you just stare at this number. Oh, we've almost sold 100 shares. SOFI now down to 823. So let's go back to the bar chart and see what's up. So the RSI starting to go down, just as the share price would tell us. We're flat on the MACD, flat to the green side, but there's another. Let's check this. Check. See what we can come up with. 824. Nope. 823. This is becoming very boring for you, so I'm going to let you go. But the plan will be to raise cash today. Let these 10,000 shares, now 9,905 shares of SOFI go. Pay back the 25,000 that I owe Robinhood. Like if they're charging me, so it's 25,000 and it's an 8% annual, that'd be 2,000 annualized. What would it be daily? So I'll owe them like $5.47. But then we'll be able to offset it immediately with the interest that we're going to collect on our money on the sidelines. What I'll try to do is collect my thoughts, maybe put them into a bullet pointed little display for you regarding the ominous flags that I see in our not so distant future with regard to this economy, the individual debt load. With the interest rates higher, credit card debts are at all-time highs, which also means credit card debt payment is at all-time high. But guess what is going up? Default. Oh, that sounds familiar. Remember 2008? I do remember that. And I'm not a doom and gloom guy. So I want to also just point you to a couple of things. If you don't ever want to listen to my thoughts on it, keep an eye on the jobs market. Okay. So I think the government probably finagles us and tricks us with regard to the unemployment rate, especially now that it's an election year. But all these big layoffs that I'm hearing about, they have to add up to something at some point, right? And those are white collar, high paying jobs. The jobs that I see with the most help wanted is McDonald's and Walmart and those lower end jobs. And as excited as we want to get about AI, right? And that's what's driving a lot of the top end of the tech side of the market with NVIDIA, Meta, Google, and Amazon, AMD, just all kinds of different companies, ARM, all going bananas because of AI, right? And then with more and more money going into those companies, the consolidation of maybe 4, 5, 10 different companies that have a ton of investors crowding into them. Well, what happens when you yell fire in a crowded movie theater? They rush the exits, so it's hard to get out. So if AI is exciting, well, what is it going to do at Walmart and McDonald's and IBM and Meta? It's going to eliminate jobs. And this economy runs 70% on consumerism. Oh, that's scary, isn't it? It is very scary because years ago, we decided to offshore manufacturing because we've got little kids in China that needed jobs. Make that iPhone. Where my Nikes at? All of that is true. Is it wrong? No, it's not. So we're going to, we should be able to bring some of that action back, but it's going to be robots making these iPhones and the trinkets that we like to buy, not human beings getting paid and then spending money at the restaurants and at their iPhone store and all the above. So some things I just have my eye on that why not take a little risk off the board and keep an eye on things, regroup. You could make money going up, going down, right? But you can't make money going down if your positions are all full and you have no cash on the sidelines. Now I have a bunch of cash in other places that I won't tell you about, but I'm only talking about this particular portfolio. So I even was explaining to Stacy yesterday. We went to look at one of our rentals. It was a longtime tenant who has vacated, and so we went to check it out. It's the first time I think I've been in the house in maybe 10 years. And it looks like a long time tenant was there. And so we're thinking, well, we'll just go ahead and sell this one too. We've been selling off our portfolio for several years now. We had 115 units at the height of our landlording, and now we're down to 8. So why not go to 7? And I said to her, there could be a return to real estate within the next, I don't know, year or so. And she's like, what are you talking about? And I said, well, if there is some sort of a major, setback in the economy, if there is a pinprick into the all asset bubble that I think we're currently in, then what happens? Real estate will basically arrive back at our doorstep. And I made a promise to myself back in 2008 when I was suffering through all of that real estate crash. And I had millions, I have $0 in debt now. I had millions of dollars in debt then, all real estate related, all cars financed. We had credit card debt. I was making good income, but I was in the fever pitch of investing, and the banks could not give me enough money. That's how much I was borrowing it. So I thought, the next time that happens, I am going to be ready and I am going to make a bunch of money. So if that happens, I will be leaving you and heading back into real estate with a large suitcase full of money. And I will even borrow money, because what will happen is the Fed will then, okay, I guess we have a problem here. Let's bring the rates back down to 0, which then will bring, mortgage rates for real estate probably in the low 4s, could easily happen. And maybe I'll, instead of paying cash for real estate, I'll leverage 50% of it, put 50% down, the other 50% debt, so I can double the opportunity in real estate. And then when the economy returns, I'll just sell off the entire portfolio and then ride off into the sunset to Marco Island. Thought this was going to be a short video. It's just some of the thoughts. I'll try to put those into a coherent explanation with some bullet points to go through with you very soon. And SoFi still, as you can tell, even through my rambling, is not cooperating. We have 9,642 shares and it is currently trading at $8.24 One last live look. This is saying 823. And so we're in the 54s on the RSI. We get back to 60 plus, then we're going to fill and sell all those shares. That you could take to the bank. And what I like to follow, you see this little green 823, that thing will move up and down, either green or red, and it's typically ahead of what the next move is. No, it's not. That says 823. That says 824. That's why we do it live. But we should fill that soon. In fact, it could be filling any second now. Let's go back to the live look. Hey, knocked off like 30 more shares. Where are the buyers? Come in here and buy it at the price that I agreed upon. All right. Thanks for checking in. Sorry I rambled. Don't believe any of this. But by the way, this is all according to my Magic 8 Ball. This is not investing advice. You should not panic or listen to anything that I say. So I will see you in the next video. As long as you are a subscriber, you like this video, leave me a lovable comment. They're all gone. There we go. All shares are gone. Cash is in our pocket. Let's go back here, see what went on with our buying power. Remember, it was at 1.9. Now it's over 2 million. And we got our money back. So there we go. Now we are not in debt. So if you take 107,000 minus 50,000, then we're good to go. We owe $5 or so to Robinhood, and now we'll begin collecting our 5% on this number. But we're going to watch this. So you just saw it at what, 20? It was just under 25,000. Watch me pull a rabbit out of my hat. So in the next 30 days, this will be, I'm going to guess 1.2 million. You're going to raise that much cash in a month? Yes, that's what we're going to do. So that'll be our next adventure as I try to explain the coming dilemma that we all face. Have a great day, and I will see you in the next video.